talk about sort of the differences, Paul, between input costs this production season and what you're looking at for 2022. I was surprised to hear that in some ways this year may be mild compared to next.
Yeah, I think it is. You have to look at the apparel production cycle, and usually that's sort of 6 to 12 months. So, fabric and inputs that we would have bought 6, 8 months ago, it's not really affecting the price of our goods today. Flash forward to 2022, and now we're really actually starting to see some increases. We're seeing fabric prices go up, 10 to 20% for this new year, and a lot of that is just because the United States made a lot less cotton over the last 2 years, and we buy our cotton. It's the Pima cotton from the Southwest United States. And I think production was about 25% down in 2020. And they've been ramping that back up, but not enough to meet demand. So, we're certainly going to see some increase in inputs. I think our hope is that that's temporary, that we'll be able to kind of get through that without passing that on to customers, which is our expectation. And then hopefully we'll have some reprieve in things like transportation, logistics costs to make that up.
I was going to say, between the material cost and the transportation cost, I mean, in the end so far, what has been most acute and which do you think you would expect to see a reprieve in first?
I think most acute has been transportation costs, and that's been for everybody across the board. I mean, making clothes has not been that difficult. Our factories in Europe have done a great job of scaling back up, and the key and the challenge has been getting goods to the United States. Typically all retailers and brands, we like to ship things in by boat. Ocean freight, and really the cost of that since pre-pandemic has gone up 200%, 300% in some cases. And it's not even the cost, it's really just the time. It used to take us 6 weeks to bring an entire container of sweaters over from Italy, for example. Today that might take us 5 weeks just to book that, another 2 months to get in. So, we, for this season, like a lot of people, relied on air freight. It's obviously more expensive, and there's still challenges there in booking capacity. But, that was really the price to be paid for getting everything in for holiday and making sure it was a really robust holiday season. So I'm hoping that the logistics side works itself out and that the input side is just a temporary issue with supply. We'll ramp back up on cotton production, and we'll be able to stable it out towards the end of next year.
Has it been a robust holiday season? What does demand look like in terms of, I guess, a pull forward maybe as people were concerned about getting their holiday gifts in time, as well as any indications that you've been seeing an Omicron effect in the last few weeks or so?
Yeah, I mean, happy to report demand has been great. It's almost like everybody looked at their closet in October and said, hey, it's time to go back and let's buy and fill this thing back up with new goods. So for us, we're 35% up in October for clothing, almost another 40% up in November. So there really was just a great push of people coming out and, buying things like dress shirts and sweaters and even blazers, products that we hadn't seen coming off the shelves the holiday prior. So I think that's all a product of more interaction. I think December towards Christmas slowed down a little bit. And I think that was a product of just a lot of fear around, empty shelves and supply levels and maybe not getting packages in time for Christmas. We didn't really experience any of those challenges. And I'll say that the local domestic carriers have done an amazing job of getting packages to customers prior to Christmas. So it's been a pretty smooth year. And we just started our big winter sale today. Demand's been really robust. So we're hoping that continues into January.
What about margins? I read in the producer's notes that you're planning on taking the higher costs, the higher input costs, and not passing those on to consumers. Is that the plan for the long term, or do you hope that some of these inflationary pressures do work themselves out midway toward the end of 2022?
Yeah, I think it's a wait and see approach. Our initial, we make a premium shirt, anywhere from $100 to, $150, $185. And I think our customer can handle a little bit of inflationary pressure, but that's not our intention. It's not to pass that on to the customer, particularly because we think it's near term. We've also been working very hard to do better in margins and increase those in other parts of the business. So we have a little bit of cushion in the near term. So our plan is not to pass it on to customers. If this lasts for, a year and a half, that story might change. But, we're producers, retailers, in the entire apparel business. You either have too much or too little, whether that's in inputs or whether that's in inventory. And so it ends up shaking these things out eventually in the long run. And for us, we have a price and we have a product that people love. And so we don't want to change that and sort of pass that on to customers.
Shepard Smith here. Thanks for watching CNBC on YouTube.